Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate filings so you don't have to. Today we're diving into Allarity Therapeutics proxy statement. It's like reading tea leaves, but with way more footnotes. This one promises shareholder votes, potential officer protection from lawsuits, and a grab for more stock options. Will it be a recipe for success or a financial faceplant? Let's find out. First things first, this is a Schedule 14A, a proxy statement. That means Allarity is asking its shareholders to vote on some important stuff at their annual meeting, which is on June 13, 2025. It's a virtual meeting this year, so no need to book a flight to wherever Allarity is headquartered. Okay, so what's on the ballot? Number one, they want to elect a Class 3 director, Thomas H. Jensen, to serve until 2028. Basically, shareholders get to say yes or may to this guy being on the board. Next up, they're asking shareholders to ratify or approve the appointment of their independent auditor, Wolf & Company, for the coming year. Think of it as shareholders double-checking the company's choice of financial watchdog. Here's where things get interesting. They want to increase the number of shares available under their equity incentive plan significantly, from 717,941 shares to 3,415,068 shares. That's a big jump. It means they want the ability to hand out a lot more stock options to employees and executives. Then they're proposing an amendment to their certificate of incorporation to limit the liability of certain officers, meaning it would be more difficult to sue certain officers for financial damages. Finally, they want the option to adjourn the meeting if needed to get more votes in favor of these proposals. It's like saying, if we don't get enough votes, we'll just try again later. Now, who are these people running the show? The board has 4 members divided into 3 classes to give a good amount of staggered stability. Joseph Vazano is in Class I, Gerald McLaughlin and Laura Benjamin are in Class 2, and Thomas Jensen, the guy up for re-election, is in Class 3. Let's take a peek at Thomas H. Jensen. He's been a director since 2022 and is currently the Chief Executive Officer. He's been with the company for a long time and knows the tech. What about the money folks, Wolf & Company? Well, in 2024, Allarity paid them about $480,000 for audit services. In 2023, it was $613 on the scope of services required. Let's zoom in on that request to increase the shares in the equity incentive plan. The goal, they say, is to attract, retain and motivate employees. Translation, they want to be able to offer employees and execs more stock options as a perk. If this goes through, they expect those shares to last for about 2 years. This amendment to limit officers' liability is interesting. Basically, they want to make it harder to sue their officers for certain things. It wouldn't protect them from everything like breaking the law on purpose or benefiting personally from something shady, but it would offer them some protection from lawsuits alleging carelessness. All right, let's dive into the financials. The table displays compensation for top executives. Thomas Jensen, the CEO, made $791,600 in 2024. It includes a big fixed salary and $100,000 in stock awards. The CFO, Alexander Ovchinsky, made $349,397. Looks like in 2024 there are still awards that have not been vested RSUs. None of the directors or executive officers directly owned any shares of the common stock as of the record date. That's a bit odd, right? You'd typically expect insiders to have some skin in the game. One interesting piece of information is that they had transactions with 3ILP, taking loans for hundreds of thousands and then redeeming later. Another item of note is that they entered into a services agreement with Olgen Gaskog Consulting AB, a Swedish company managed by their CEO Thomas Jensen. It's not uncommon to see these type of agreements. Finally, a key aspect of this company's corporate governance practices are the awards subject to compensation clawback or recoupment if fraud occurs. It's intended as a check and balance. Ew, what's the story here? Allarity is asking shareholders to approve a bunch of stuff that could significantly change the company's direction. The big ones are the stock options increase and the officer liability protection. Both could be seen as ways to attract and retain talent, but also raise questions about potential dilution and accountability. The CEO's previous related party transaction also warrants some scrutiny. On the financial side, zero insider ownership raises a red flag. Do the people running this company truly have skin in the game? Overall, Allarity has some strength but also some real weaknesses. There are notable risks and opportunities that the shareholders should consider. Do your due diligence and make an informed vote. And of course, thanks for watching. If you found this Corporate Decoder episode helpful, please hit that like button, leave a comment with your thoughts and subscribe for more deep dives into the world of corporate filings.